The European Union, Japan to varying degrees are starting to follow suit, and so China just faces thousands of new trade and investment barriers every year that it didn't face as recently as 10 years ago. And at the same time, China's security environment is also starting to look a lot more dangerous. So this is a map of US military bases that are currently being expanded. You don't need to be a strategic genius or attend the World Knowledge Forum to understand the basic story that's going on here. This is what Xi Jinping calls all-around encirclement by the United States. So China's boom now is finally coming to an end, and unfortunately it's having shockwaves for lots of other countries today because so many economies tied their fortunes to a rising China, and for good reason. And so to sketch this out, I want to take you back to the 2000s. Some of you are probably too young to remember that, but for those of you that do remember it, you'll remember that China was growing at double-digit rates. You might also remember that the rise of China was the most read about news story in the world, by far. Nothing else came close. It was the most decisive event of the first 2 decades of the 21st century, way more than 9/11 or the British royal wedding or whatever other news story you want to put out there, and for good reason. China generated more than 40% of global economic growth in the 2000s and the 90s. Some scholars compare it to the Industrial Revolution or the Renaissance in terms of its global impact. I don't know if I'd go that far, but it certainly was spectacular to see China rise. And during this time, China becomes a buying machine. It just starts buying up everything around the world. Soybeans, computer chips, cars, pharmaceuticals, machine tools, whatever it was, China was buying it. And so the China market becomes a gold mine for many countries around the world. You can see that imports as a share of China's economy rise substantially. The Economist magazine even created an entire index that they call the Sino-Dependency Index, which just showed how incredibly dependent other economies became on China's economy. Even major countries, Germany, South Korea, Japan, France, had upwards of 10% or more of their fortunes essentially tied up in trade and investment with China. China's rise, its insatiable demand for resources also just drove up the price of commodities around the world. And so this had the indirect effect of bringing up countries that weren't even trading directly with China. They just benefited from the fact that the things they had to sell were selling for a higher price. Russia, for example, the rise of China basically created massive demand for everything that the Soviet Union used to produce, whether it was weapons or oil and gas or machine tools. And so China's rise helped propel the resurgence of Russia as well as dozens of other economies during this time. At the same time, China wasn't just buying stuff, it was also lending money abroad. So as it accumulates wealth, it then turns around and starts lending out money mainly so countries could employ Chinese companies to build infrastructure, roads, bridges, telecommunications networks, soccer stadiums. Over the last 20 years, 1 out of every 3 infrastructure projects built in Africa was built by China. And so China becomes this dominant dispenser of loans. But unfortunately, that era is now over. This era where really countries were getting a triple win from China, a huge market to sell their exports into, a seemingly bottomless supply of loans to finance all their development projects, and then lots of experienced Chinese companies that knew how to build pretty much anything. That all has been going away in recent years. Studies show that every 1% decline in China's economic growth rate reduces the economic growth of its main trading partners by about the same amount.